you ready to talk some real estate?
Yeah, definitely. I love talking real estate.
Perfect. So let's start with the background on you and kind of how you kind of got closer to your journey of starting real estate.
Yeah, so my husband and I have always been entrepreneurs at heart, and we've had various businesses through the years. Um, Through that, I have had an interest in real estate I read, Robert Kiyosaki, Rich Dad Poor Dad, like 20 years ago, and that started the flame for me. But it wasn't right away that we were able to invest in real estate. But through the years, we've done some fix and flips, and never, I look back on that and wish we had kept a lot of those properties, but we didn't.
Yeah.
And we just kind of got tired of the time intensiveness to the flips. We have 4 kids, and life got crazy with kids and business, and so we kind of stopped doing flips, but wanted to focus on getting into more buy and hold real estate. So through that, I had also before that, I had also gotten my real estate license. I had done a little bit of residential, but then got into commercial because that was ultimately my goal. So I am still a commercial broker. But just recently, we started focusing on, okay, we want to actually get some real estate that we're holding and we're getting passive income from. So we're doing co-living right now, and have learned a lot from Miller, who I know has been
hmm
on your show. But yeah, doing co-living in the springs. And part of that came from the fact that to cash flow on a property here in Colorado, you have to get creative. And so I was doing, some research on some creative methods. A short-term rental, like you do, is one that I looked into. But the co-living, I just thought, was a good place to start. And really, we've been loving it so far. It's been
hmm
great. Yeah, once we finally got it filled, it's been a great cash flowing property and
hmm
very minimal maintenance.
Awesome. And so for co-living, explain what that is and why you think it works best here in Colorado.
Yeah, so it's basically rent by the room. And I think it works really well in either high density areas or areas where the cost of living is very high. And what we've chosen to do with it, so we're not really like we're not trying to make it like a college frat house where we're leasing out. There are those investment strategies, but we've chosen to focus more on young working professionals. And so in that, some of the design of the property is, I would say, it's kind of like a morph between um, like a bachelor pad and short-term rental. It's not quite as high end as short-term rental,
Yeah.
but we've tried to make it nice and good amenities. So we're outfitting the living room and the kitchen, and the bathrooms with everything that would be needed, and then
hmm
just leasing out the rooms separately, unfurnished or furnished, just depending on what the
hmm
tenants would like.
Okay, so do you have like beds ready to go so you could like pop them in there if somebody wanted a bed, or and if like, oh, you have your own bed, we'll take it out type of a thing?
So we know what we buy on Amazon.
Okay.
So we don't have it like in storage somewhere, but
Yeah.
I've just kind of figured out. So we've got, right now we have 2 that wanted it furnished. Well, actually 3 that wanted it furnished. And so the rest have just brought their own stuff in.
hmm
Um, but I just kind of have on quick order, like
Okay.
what we get, and know how long it takes to get there.
hmm Okay.
Yeah.
Um, is it kind of like when you are in college and you go to like a dorm and it's like, okay, you have like your basic bed and maybe a desk and a chair and it's pretty like bland, just like that? Or do you have like any decor in there and any bathroom items set up?
So for the furnishing, we do like, bed frame, mattress, and bedspread. And then upstairs, if they're wood floors, we do carpet just to kind of protect the wood floors,
Hmm.
or a rug. And then we do a nightstand, a lamp, and a dresser. No
Okay.
wall furnishings. So it's not like, again, it's not decorated like a short term rental, but we're not just getting crappy stuff from Goodwill and
Hmm.
throwing it in there. So
Hmm.
kind of a middle
Got it.
ground.
Yeah. And
And then,
with
go ahead.
I was gonna say with co-living, you have to add bedrooms into it ideally, and to make it more profitable, because the more bedrooms you have, then you can rent them out more. Did you have to add bedrooms in this property that you have?
Yeah, we did. So we added 2 bedrooms and a bathroom. And that was in the downstairs area. There was just 2 bedrooms down there at the time. We added 2 more, so the house is actually a 7 bedroom, 4 bathroom house, and that allows, so one tenant has their own bathroom, private bathroom, and then the other 6 tenants, just 2 tenants to a bathroom, which at this point we found has worked really well. I don't know if we'd go up to 3 tenants per bathroom. I kind of like just the two per bathroom for now.
Hmm. Yeah. How was the rehab process like when you were adding those bedrooms into the property?
Um, it was good. So we had a good contractor who did great work. I would say um our biggest hiccup there was communication. Just, us maybe not asking clear enough questions, and the contractor not clearly communicating exactly what was going to be happening and what things were going to cost. And so I think that was a learning experience for us, just that communication piece, really making sure that we fully understood all of the costs involved, and all the different aspects that we would need to be taken care of, that he would be taken care of. So I think that, going forward on other construction projects, because when we did our flips in the past, we did all of the work. Like, it's a good and bad thing that we're both really handy. My husband's super handy. He can do all the plumbing, electrical, like all of that. Because of that, we just ended up doing it all ourselves. So this was the first time we had like a really extensive project with a contractor.
Hmm.
Um, and so I think that was definitely a detriment to us in some ways, because we were coming at it just more of a loose interpretation of things. And so
Yeah.
realizing that I need to be really specific when I'm communicating with the contractors and really nail them down on things, was an important and a good lesson to learn. But I would say
Yeah.
he did good quality work, and he handled subcontractors well. We had to actually add 2 egress windows in the 2 rooms that we added.
Hmm.
We had to get permit through the city. We had to be
Yeah.
a little more above board on things. But he
How
did a
much did
good job.
he did those, and how much did those cost specifically? Do you know?
So the windows themselves, I'm trying to think of how he had it itemized. I think the windows ended up being about 5 to 6 thousand per.
Okay, that sounds
So
about right to what
yeah,
I was thinking. I've heard estimates around 6 to 8 is what it has been.
yeah. And that was everything, like drilling out the foundation and the materials and labor and all
Hmm.
that.
Okay. Did you have like a an engineer to come in and like have to analyze the foundation on if you can cut in right here and
Yeah,
everything?
yeah.
Yeah.
So we had to have that done.
Yeah.
And then had to get that stamped and approved by the city and all that.
Was that done before you went under contract, or like while you were under contract, or afterwards?
That was after.
Afterwards. Okay. Were you a little nervous there of like, oh no, what if
Just a
we're
little,
not able
yeah,
to do this? Yeah.
but yeah, but we kind of knew that it would probably be permitted, just based upon, it has to be like a certain distance away from the other property line, and it
Yeah.
was close, but we were pretty sure it was going to work. So,
Hmm. Okay.
but
Well,
yeah,
that's
there was
good.
a little bit of nerves there.
Yeah. Okay, so you are been doing co-living, but you're a commercial real estate broker. Which one do you like a little bit better, and what are the differences that you mainly see?
Um, so it depends on if you're talking. about investing or the actual work. So as an investing strategy, as an investment strategy, I feel like, co-living and commercial are so different. They are, so with my commercial brokerage, I focus primarily on industrial properties. I do some office retail, but my primary focus is industrial. And so comparing, co-living and young working professional tenants to business tenants is very different. But I would say they each have their pros and cons. So what I'm loving about co-living so far is it's a low barrier to entry, but you're able to spread out the risk because you have multiple tenants on one property. And when you're looking at commercial in terms of investment, depending on the type of property that you're investing in, there can be higher risk with that. So if you've got like a single tenant property, whether it's retail, office, or industrial, if that tenant leaves, you're out all of that money. There's no risk mitigation there. And commercial just has a much longer life cycle. So normally our deals take between 6 to 12 months. So that's with both leasing or selling the property. That's just kind of the average time that you see. Now, if it's like a really niche property that's in high demand, you might see more like 3 to 6 months, but still, that a high demand property, you're still looking at probably 3 or 4 months before you get someone in there. Whereas you look at multifamily or co-living, usually it's like a month where it's vacant and then you have someone in there. So
yeah. What's the typical like down payment that someone should look to do for a commercial property? And you would need to have a good amount of reserves set aside too if you're going to have to go a whole entire 12 months of no tenant coming into place.
Absolutely. Yeah. So typical down payment, in the past, it would be like a conventional commercial loan at 20 to 25%. Banks recently have been a little more aggressive on what they're asking for down just because of the nature of the market right now. And so we're seeing more like 25 to 30% down. And of course, that does come back to just even the financial stability of the borrower. And so if they feel a little bit more hesitant, they may ask for a little more down. But generally, you could say between 20 to 30% would be a normal down on those commercial properties. But when you look at, again, if you're comparing commercial to co-living, when you look at buying one house for $500,000 compared to even just a single tenant industrial building, it's hard to find one under $1 million. And so the down payment is that much greater and that much harder.
Yeah, huge significant difference. And in the single family home, you could house hack it at first and still do co-living to have an even lower down payment to get started.
Yeah, for all you young people that don't have kids, yes.
Yeah.
I wish we had started with house hacking. But yeah, absolutely. I think that's a phenomenal strategy that a lot of people are using is that house hacking and then continuing to move on from there.
So how did you decide like commercial real estate is what I want to go into instead of all the other residential stuff?
So I think part of it being that residential is pretty oversaturated. And then, again, coming back to the fact that Colorado itself is a pretty expensive area for investing, and so you do need to have some more creative solutions to cash flow. Now, I've looked at potentially going out of state investing. I'm from Ohio, and so I've looked at some different markets in Ohio that I may eventually invest in. And just the cost of homes there is so much cheaper. But in general, commercial to me, so I think what is the most attractive to me about it is like I said at the beginning, I'm an entrepreneur at heart. My husband and I have always just loved business and loved supporting businesses. We actually own a marketing agency, a digital marketing agency. And, through that, as well as like my commercial brokerage, I love being able to help businesses get into a place that fits them well, that will attract more customers, with the marketing, being able to help businesses grow and scale. It falls in line with our love of entrepreneurship and small business. I just feel like communities are built on small businesses. And I think it's such an important thread in every community is to have those really strong small businesses. So I think with commercial, that excites me because it supports that. It supports small businesses and growth.
Mhm.
And then in terms of the investment potential with commercial, and I didn't really get into this when I was talking about co-living, there is an aspect with commercial where it's a much more passive investment. So generally on a lot of commercial spaces, the structure of the lease with the tenant you get in there is what's called a triple net lease. And with that, the tenant is normally responsible for all of the inside maintenance of the property. So the HVAC, the light bulbs, the toilet, like you don't get calls on leaky toilets and the lights out and my door lock is not working, which was a call
Mhm.
yesterday for the co-living. You don't get those calls because the tenant is fully responsible for all of those. Along with that, they're also on a true triple net lease, they're also fully responsible for all of the expenses on the property. So the property insurance, property taxes, and then just any like common area maintenance expenses. And so commercial does provide an avenue for much more passive income. And it's more solid, like your numbers, what your expenses are going to be. And if there is an unexpected expense, if the lease is written well, then the landlord can pass all those expenses through to the tenant.
So who decided that who created this triple net lease and was like, you know what, let's just have them pay for everything and we're just gonna do nothing. Like
I know, I've wondered the same thing. I don't know who decided that. So there are three different types of leases. Like
Mhm.
generally, there are different iterations of all those. But the triple net lease is the one where, like I said, tenant pays for everything. And there are some leases, and this is why I would say it's really important if you're ever leasing a commercial space to have a commercial broker, because or an attorney review your lease. But there are some leases where they're so well written to support the landlord that that the tenant is like absolutely responsible for everything. If the landlord repaves the parking lot, the landlord can bill back the tenant on their pro rata share of those expenses. If the landlord re-roofs, etc., all of those things can be passed through. So that's a triple net lease. There's also a gross lease and a modified gross lease. So a gross lease is where the landlord is paying for all the expenses, but normally those expenses are kind of factored into the gross monthly rate that the landlord is charging the tenant, but it's not a strict pass through, an exact pass through on those expenses. And then a
Mhm.
modified gross is just what it sounds like. It's kind of somewhere in between. Like the landlord
Mhm.
pays for some, the tenant pays for some.
So,
Um,
so does it depend on the type of property that you have as well? If it's like industrial and retail compared to a storage unit and RV park type of thing?
so the industrial used to have more gross or modified gross leases, but it really has morphed into the triple net lease model. And so I would say most of the time you see triple net lease in all sectors, so office, commercial, and retail. Sometimes you'll see a gross or a modified gross because it is simpler that way. And I will tell you, like, the one thing about triple net lease that can be tricky as a landlord, as an investor, if you're doing that, is the triple net lease requires really extensive accounting and tracking of those expenses. and and then some, again, if the tenant is represented by a broker or has an attorney reviewing the lease, some tenants, some of those leases will require that the landlord provide a very detailed accounting of those expenses at the end of the year. And if there's an overage, so if the landlord has been charging more than what the expenses actually came out to be, then the landlord has to pay that back to the tenant. Whereas vice versa,
Mm.
if there's an overage, then the landlord can bill the tenant, which that's more common, honestly. Expenses just
Okay.
so that's more common. But that detailed accounting sometimes can be um, too time intensive for some landlords, just according to what they want to do. And so that's where
Hmm.
you'll see some landlords do like a gross or a modified gross.
Oh, okay.
They don't have to
Got it.
actually prove those specific expenses.
Hmm. Got it. Okay. So, is there a reason why like residential doesn't do a triple net lease? Is it like banned that you can't do a triple net lease for residential, or?
Um, you know, I think so much of real estate is just what is common, what's accepted within the specific area, within the industry. I don't know of any particular laws that prohibit a triple net lease of sorts. But because it's not a common practice within residential, I think it would be difficult for a landlord to start doing that. Now, with co-living, like we do kind of handle that a little more. So we like roll all of the utilities and everything into the
Hmm.
tenant's not paying utilities because it would be hard to split that up directly, and we kind of roll that into the price of the lease, so it's kind of like a gross lease. um, but yeah, I think just because it's not a normal practice, it would be hard to get that through. And that's the case even for some intricacies within commercial in different areas. They may handle things differently in Texas than they do in Colorado. And so generally brokers and owners, investors in the area they'll follow the common practices of that area.
Hmm. So, what are the biggest challenges that you've seen as a commercial broker so far?
Biggest challenges, I would say that right now has been an interesting time with high interest rates. So during COVID, especially in industrial, like industrial just took off because there was such a high demand for warehouse space, with all businesses, with everybody stuck at home and everybody ordering online, and retail businesses that all of a sudden needed to figure out online sales and distribution. There was such an increase in demand for warehouse and distribution space. And so industrial just skyrocketed the price per square foot, and there was such a low supply. So during that time, owners of industrial and honestly across all sectors, because of the low interest rates, property owners were able to get a purchase price that was pretty low cap rate on their properties. We saw like 5% cap rates, and even like on some really stable investments down in the 4%. The challenge now is getting owners' expectations to be in line with reality. So, with interest rates at 7.5%, 8%, nobody can buy an investment property at a 5% cap or even a 6% cap. And so I think that's the biggest challenge right now is trying to level out those expectations and navigate that with sellers and helping them understand we're just not in the same market anymore that we were 2-3 years ago.
Hmm.
I feel like there's starting to be a level out on that with their expectations based upon pricing and cap rate. But we still see a lot of investment sales that are priced at like a 5.5-6% cap. And unless
Hmm.
they're providing seller financing, or an investor's coming in with all cash, which is very uncommon, it just doesn't make sense.
Hmm. Could you explain what a cap rate is and how you use those metrics to analyze commercial property?
Yeah, yeah, definitely. That's a good question. So cap rate is basically the rate of return that you could get on that property if somebody were to buy it with all cash. Now, like I said, most of the time you don't, but it's like your return on the price of the property, what you paid for the property. And so if you think of that in relation to, let's say like a stock, if you're getting 7% in the stock market, that's your rate of return for the amount of money you have in there. It's similar to that. And so if your rate of return is 6%, that cap rate is 6%, but you're financing the property at 7.5%, you're paying 7.5% interest annually, and that's an annual rate of return. Then obviously you're paying out more annually than you're bringing in. And so that's
Hmm.
where that cap rate and the interest rate are
Uh,
often
okay.
each other.
I see. I see. So if you are buying something at a 7% interest rate, but it's only a five cap, you would technically would be losing money.
Yeah. Yeah.
Okay.
Now, depending on how much you put down and depending on what type of
Yeah.
additional value add strategy that investment may have, like
Hmm.
multifamily. So multifamily has a lot more opportunity for increasing value on properties, um, which can help, with that cap rate and interest rate comparison.
Hmm.
Um, but most other commercial properties, especially if you're purchasing a property with an existing tenant, which is that's usually when you're going to purchase at a certain cap rate. Most of those commercial properties, there's going to be limited opportunity to increase the value on those properties. So that's where when you're coming in at a 6% cap and you're financing at a 7%, and the tenant that's in there, their lease lasts for another 5 years and there's like a set increase on their lease rate, there's no way for you to increase the value on that property because it's set. Um, the nice thing, again, about those commercial investments are if you get it at a good cap rate, you've got that solid tenant for 5 years. You know that for 5 years you've got set income on that property. They're paying all the expenses. It's a very low maintenance investment.
So for a good deal here in Colorado Springs, you would want something that's at like an 8 or a 9 cap if you're buying at 7, 8% interest rate, doing
Yeah,
25, 30% down.
yeah, definitely.
And
Again,
how hard is that to find
how hard is
when
that? It's like next to impossible. Um, yeah, and again, unless the owner can offer seller financing, which seller financing is not uncommon in commercial real estate. Like that happens often, and it's becoming more common in residential, I feel like. But for years, that's been fairly common in commercial is creative financing methods. So that's an option because if you can get we closed one a month or so ago, and the owner, the seller, was willing to do seller financing, and this was for an owner user, so it wasn't as it didn't play into the cap rate. There were a few other tenants in the building, but they were primarily using the bulk of the building, so the cap rate wasn't as important. But the owner was able to do seller financing for about, I think it was 1% less than what the current market rates were. And so, that just gives a lot more flexibility, especially it was on like a $4.5 million property. And so that changes the monthly
hmm
mortgage amount considerably.
For when they're doing owner financing, what's the typical terms that they do for the amortization of it? Do they do 30 years and do
So
they do
normally
balloon
it's
payments?
20 or 25 years on the amortization.
Okay.
And then it's usually between a 5 to 10 year balloon mortgage. 10 years less common. 5 to 7 years is kind of the normal that you'd see on that balloon mortgage. Occasionally, if you've got a seller that really just wants to be out of it sooner rather than later, you'll see like a 2 to 3 year balloon mortgage.
Okay. So for not necessarily owner financing on commercial properties, but also for like a standard loan, are those loan structures still 20, 25 years amortized? And do they have balloon payments, or are they more like arms that are going
No,
on?
well, it's it's across the board, I would say. I think a lot of the owners that got the arm mortgages, the arm commercial mortgages, you know, in the last 2 to 3 years are the ones that are in trouble now.
Hmm.
um, so that's where you see opportunity come up. But I would say probably, you know, 75% are more of the fixed interest rate. And yes, in commercial, it's also this a similar term where it's like 20 to 25 years amortized and a balloon mortgage of some sorts as far as a conventional commercial loan. And
Hmm.
usually it's like between 5 to 10 years for a conventional loan on that balloon mortgage.
Okay. Um, so when I hear, like on Bigger Pockets podcasts or any like real estate news that pops out when they talk about commercial real estate, they're saying that like right now it's like blood in the streets for all commercial properties because they either have to sell or refinance because their balloon payment is up or their arm or whatever is up right now. Um, is that true of what you were seeing, or how would you avoid from getting into that situation?
Yeah, that definitely is true for those that didn't stress test well at the beginning and didn't buy well. So there are definitely some properties that are, they're underwater because of where the rates are now. I mean, it's a huge jump from 3 to 4% to 7, 8%, even sometimes higher, just depending on the situation. Um, I would say to avoid getting in that situation, you really have to do a lot of stress testing on your investments and understand that that interest rate is like a huge factor to the viability of that investment. And so if these guys, back 3, 4 years ago had just said, okay, what happens if interest rates go up to 6, 7%? And then base their purchase price on that, there would have been a lot more safety in their investments. So I think it just comes down to a lot of worst case scenario in a way, like playing worst case scenario, hoping for the best. But especially when you're doing an investment where in commercial where it just doesn't things don't move as fast and the economy plays into the value of that property so much, being able to weather those storms. Now eventually, interest rates will probably level out a little. I mean, I don't know that we'll see anything like we did in COVID for years to come, but
Hmm.
interest rates will probably level out a little and economy will get stronger, but we may have a few years where there's this continual turmoil. And if you're not able to weather that, kind of comes back to like those reserves, cash reserves, like you were saying earlier. If you don't have those cash reserves and you don't have the plan for the what ifs, what if interest rates are here? What if vacancy is here? If you don't have that planned out and you can't weather that, then yeah, you're absolutely you're gonna feel the pain of that. And a lot of operators are.
Hmm. So would you say that commercial real estate is not probably the best thing for a beginner to be jumping into right away?
Um, I think not necessarily. I think there's a harder barrier to entry, and so it's more difficult to get into it as a beginner. But I think there's certainly I guess it depends on how you define like commercial real estate, because someone can go out and get an eightplex multifamily, and that's technically commercial real estate, but there's more similarities to single family if someone's been doing single family rentals. But I think you know either way, it's important for anybody that's diving into something to really be well educated, and seek out mentors, seek out peers that are doing the same thing. Um, but at the same time, something that I've learned is like you learn the best from actually just doing the thing, from taking action and making mistakes. And unfortunately, it's the school of hard knocks. Like that's how it really gets in your brain so much better. And so I would say for somebody starting out, if you're starting in commercial, start small. If you want to do industrial, just get a single tenant industrial property, but find good people to support you. Find a good broker, find a good banker, find a good attorney, like find that support. I think that's the more important thing, and educate yourself as much as possible. And then you just got to, at some point, you've got to dive in and figure it out. And everybody will make mistakes along the way. I think in terms of like getting into commercial, it can be a little harder than getting into residential. And just focusing on like one house for, whether it's short-term rental or co-living. That's easier. Banks lend on that easier, and they don't need to see as much experience in the management side when you're just getting into single family. But I think both is a learning experience. I mean, short-term rentals, I'm sure you would say, like, when you started, you probably had no idea what you're doing, and you've made mistakes along the
Yes.
way,
Yeah.
and you've learned a ton, and like
Yes.
you're doing awesome at it now, but you didn't start there. And I think it's the same for commercial.
Hmm.
You get in it and you learn. And
Hmm.
I think just surrounding yourself with good people is one of the best things to jump into something new.
Hmm. Sweet. So if you were to analyze a commercial property, we talked about stress testing of like on different scenarios. Is there anything that you would add on like how to analyze a commercial property correctly?
Um, I would say so. Commercial, when you're talking about like industrial, office, or retail, that's a little different than multifamily. With all three of those sectors, it's actually fairly simple. You look at the lease. So if it's got a tenant in there, which if you're purchasing as a cap rate sale, it's going to have a tenant. It's going to have income in the property. So if it's got a tenant in there, you're looking at the lease, look at annual escalation. So most leases have a set escalation that lease amount raises each year. Normally it's between 3 to 5%. And so you'll look at that, and then look at how that lease is structured in terms of like the triple net gross, and that's important to know. So one of the most important things when you're analyzing a commercial property is to see the lease. You want to know how that's structured, who's responsible for what cost, and what what the lease amount is, what the annual escalations are. Also, how long is that term? What are the terms for terminating the lease? Are there options to renew the lease? All of those various factors are important, because that's like the stability of your investment, is that tenant or those tenants if it's a multi-tenant building. And that's what the bank will look at as well. And that's why I would say, surrounding yourself with good people, like lean on your banker, because they're going to be concerned about the stability of your investment as well. And so they'll be looking at the leases and the underwriting for the underwriting as well. And so like that's a really good avenue for learning more about the stability of the investment. But I would say looking at the income on the property and how the lease is structured to know what expenses you would be responsible for, and then just looking at the terms, the lending terms, and seeing where that comes out. So it's similar in a lot of ways, where it comes down to what's the NOI on the property, and can I cover the mortgage payment with that, and do I have enough cash reserves for when unexpected expenses come up.
Mm-hmm. So once you analyze it, you make your offer, say it's accepted. What's like the timeline from going through inspection and then closing? Is it like a 1 month still, just like a residential?
No, it's a little longer for commercial. Generally, we see between 60 to 75 days, like full cycle from MEC, mutual execution of contract. And the due diligence usually is between 45 to 60 days. So just depending, again, on that, how long the cycle is. Some sellers or brokers may push for a little bit tighter timeline, but I think the quickest, let's see, I'm trying to think the quickest that we've ever done it. It was like 35 days or something, and it was really pushing it for commercial. There are just things are slower in commercial. And so I would say you really would want to be like at least 45 days or more.
Mm-hmm. I think the one that we did was about 45 days.
I think it was, yeah.
Mm-hmm.
Yeah.
Yeah. And there were no issues with that one, Yeah.
Well, of course not.
Yeah.
Yeah. Have you told your listeners about your commercial deal? So this is how I met you, right? Is that how we met?
Well, through kind of. We met at the meetup and kind of through Bigger Pockets as well. And then it popped up, and I was like, I don't know anyone in commercial real estate except for Renee, so I'm just going to ask you. And then you had someone that wanted to buy it, and it worked out. And
it did. Yeah. It did. It was an interesting deal, but it worked.
Yeah. Has he got it rented out yet from the rehab that he was doing on it?
Some of the units, the one end unit that was just like total
yeah
like holes in the ground and everything. He's got it almost completely built out. He ended up, he was going to split it into 3 different flex units, but he ended up just doing 2, so 2 like 4,000 square foot units. And he's got like a tenant almost ready to sign on one of the units, but then the other one is still looking for someone. So
Mm-hmm. And when was this first purchase? This was it last summer?
Yes, it was last May. Last May. So I mean, that's an example of like how long commercial takes. Yeah. Now this had a lot of like construction that needed to happen. And the city is, city's just kind of slow on all the permitting and COs and all that. But he probably had it pretty close to being done. I would say like February, March, where he could have, like, if he had a tenant in there, he could have pushed to get it completed. And so, it's still been another like 3 or 4 months to get that filled. So commercial takes a long time. I think that's something else that I didn't mention. You got to have those cash reserves for not only like improvements and rehab and all that, but like just the time to sit on it until it gets filled. And so that can be a hard thing for new investors, going back to like new investors, that can be difficult because the cash reserves sometimes are a lot greater.
And so you sit on it, it could take 12 months, but then once you sign that lease, what's the typical time frame for a lease? Is it not just 1 year, or is it typically 3 years, 5 years, longer time frames?
It's 3 to 5 is normal. When you've got like a larger tenant, a national tenant or regional tenant, and in some retail, situations. Actually, a lot of retail is going to be longer, like 7 to 10. When you've got a national tenant in there, a lot of times they want more like 15 to 20-year lease, because they want the security of that space, and they can lock in a low annual escalation.
Hmm.
um, and that just protects their cash flow through inflation. But generally, for most like small retail units, office, industrial, you'll see like between 3 to 5 years.
Hmm. So what's your best commercial real estate story that you have for us today?
My best story. Well, there are a lot of interesting, a lot of interesting situations. Um, but I would say like my very first like official showing for the company that I am currently at, I felt like it was a complete disaster. So um, I came on with this company through a family connection, like a friend connection. And the employing broker, he was not real crazy about me being coming on. And that's a whole nother story. But the friend that brought me on, I kind of came on as his like assistant at first. And so I was handling like calls and scheduling and emails and all that. And we had a pretty big investor from Denver that had called in on this one property. It was a 45,000 square foot office. I'd only been at the company for a few weeks. I had never been to the property, but my direct boss, the kind of family connection, he had told me, okay, this owner is very particular. He only wants to talk to me. So this is the owner of the office building. Only wants to talk to my direct boss. And whenever we have a showing, we have to give him 2 days notice. And he's very particular about like locks and how the property is showed and handled and all that. So I had never even talked to the owner. We had this big investment firm from Denver that had scheduled to come down and tour the property. I scheduled with them. I made sure it was fine with my boss's schedule, put it in his calendar. He knew about it. The day comes, and for some reason, he didn't come in to work. And I'm kind of like, it was the showing was at 11. So I'm kind of like, I have this in the back of my mind. I thought, well, there are some days where he would go straight from home to a showing. And I thought, well, maybe he's doing that. And so about like half an hour till, so at like 10:30, I called, no answer, left a message, said, hey, I just want to make sure you're going to show up at the showing, because they're coming down from Denver.
Yeah. This is
And
like big, like, showing the house is
yeah,
coming all the way down. Like, this is a big story.
yeah. And they had to reschedule. Yeah. So we had to reschedule a few different times. One of them got sick. And so, it like, we'd rescheduled. So I'm like, we've got to make this happen. Well, then like 10 minutes go by, I didn't hear anything. I texted him a few times. And so I was like, I don't think he's going to show up to this. I have to go try to get them in this building. I'd never been to the property, never met the owner. And I knew he was a really particular owner. And I only had these few notes in our files on like showing instructions. And I was just hoping that they were thorough enough. So I went there. I was a few minutes late because I wasn't really planning on showing it. And they were all waiting on me. And so, normally when you're showing, and again, this is like my first big commercial showing.
Yeah.
Normally I would have showed up like half an hour early and made sure I had like everything all set. Well, they're following me to the property, and I'm trying to figure out the instructions. And so I get the key out of the lockbox, and there was an alarm. But but there was no instructions about how to turn the alarm off.
Oh, no.
So, I open the door and the alarm starts going off. And so then I was like, trying to figure out what I put in this alarm box to get it to stop.
Hmm.
And all these bigwig investors are like standing behind me like, is this girl actually even allowed to get in this property? And I couldn't get it off. Finally, I tried the same code on the lockbox. I tried that and that turned it off. Why didn't I try that first? I don't
Yeah.
know. So that worked, but it had been on so long that like the alarm company got called.
Hmm.
And so, we got it off after, I don't know, 5 minutes or so. And I was kind of like, again, I had never talked to the owner before. And so I had never toured this property before, and it's one of the most confusing properties to navigate. There are multiple different keys, multiple different lock boxes. It's really confusing. And so I was trying to take them through the property. Well, then the owner's property manager showed up, and he was like, what's going on here? What are you doing?
Yeah.
So then he said, I've got the owner on the phone. So I had to talk to him and apologize. And it was a mess. It was like a pretty bad showing. I couldn't even get them into all of the spaces because I didn't know all of the weird codes.
Hmm.
And I was mortified. But I carried on. They didn't end up buying it.
Yeah.
I'm not sure why. But yeah, it was come to find out my direct boss had a family emergency, and so
Yeah.
wasn't to be there. And anyways, it was one of those like I just felt like I totally bombed that one. But yeah, you learn to be more prepared in the future.
Yeah. Happens to the best of us.
Yeah.
Well, that was a great story. What about a motivational quote that you really like that would help others in their real estate journey?
Um. So I love quotes. I would say so. One I really like is do the best you can until you know better. Then, when you know better, do better. That's by Maya Angelou. I love that. I am naturally a perfectionist, and that's a good reminder for me to just like take action and keep going with what I know. And then, kind of like I was saying, as you go, you'll learn, and then take what you've learned and just choose to do better and become a better version of yourself. I think the whole real estate journey is, it's half action and half mindset. And I think you become a better version of yourself if you're intentional about it as you go, because you have to stretch yourself and you face challenges and you have to keep going, and you deal with people all the time, and that's always difficult. And
Yes.
yes. And you have to learn to be a better person, and learn to be more patient or learn to be more assertive. Like for me, like that's something I've had to learn more in my negotiations as a broker, is to be more assertive. And so I think that quote just is a good mix for me, like as a perfectionist, to not get stuck in that, paralysis by analysis, and to still do stuff with what I know, and then understanding that I will learn, and I can take those learning moments, and I can become a better version of myself.
Hmm. That's awesome. I think that's great advice. And because I know a lot of like first time investors that they're afraid to get started because they're like, oh, what if this goes wrong? What if that goes wrong? It's like, well, there's no way to find out unless you just get started. And then
Yeah.
you'll learn and you'll be like, oh, that didn't go wrong at all. Like it wasn't even a problem. So now
Yeah.
it's like, oh, but this thing went really wrong. So let's fix that for the next time type of
Yeah. Very
situation. So,
true. Yeah.
well, Renee, thank you so much for being on the podcast. We learned a ton. And if anyone wants to reach out to you about commercial properties, where can they find you?
So I've got a website, reneenewland.com, or I would say Instagram, rrnewland19. Would be, best two places. If you're interested in brokerage, my email is renee@peakcp.net, stands for commercial properties. So Renee, RENEE at peakcp.net.
Awesome. And I'll put that all in the show notes for everyone to check it out there. So, Renee, thank you again. That was awesome.
All right. Thank you, Tanner. Pleasure to be on with you.